Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Mainnet 2024 by Masari. Joining me for this segment, we have Reba Beeson, General Counsel at AlphaPoint. We're here to discuss the opportunity with real-world asset tokenization. Reba, it's great to see you. Welcome back to TradeTalks.
Thank you.
It's a sector that's growing and only getting bigger, and the opportunity is multi-trillions of dollars. Why is this such an attractive space to be?
Well, it's because of what you say about the size of the market, but what's driving the size of that market, which is expected to grow to $2 trillion by 2030, is the use cases associated with that asset class. So as you fractionalize the underlying assets that take up the tokenization product, what you're doing is opening up the markets. So you're expanding the markets, providing liquidity, providing more transparency, and it's going to be able to allow those assets to reach a bigger, wider net of those who have an interest in investing.
Are these typically assets that aren't necessarily as liquid? Let's say, housing or mortgage as an example.
Yes, a lot of the assets are those that are not currently liquid for whatever reason, either the size of them or the regulatory constraints around them and how they get wrapped. And so what this is doing, like you mentioned real estate, it's opening up the ability to invest in real estate without having such a large minimum size of investment requirement, and also being able to reach other investors in different jurisdictions across the globe.
Speaking of jurisdictions, what about the U.S. regulatory environment? Is the framework being developed or in a better place to allow expansion of tokenization, or for crypto to continue to thrive?
Well, it's interesting that you put it in that context, because recently, just last week, the SEC granted an exception to BNY Mellon, which allows BNY Mellon under the SAB rule, the Rule 121, that's very restrictive about the custody of digital assets and how that gets accounted for in the balance sheet. It has to be maintained on the balance sheet. That exception that now applies to BNY Mellon allows them to custody digital assets, which will maybe open up a broader market for the custody of these assets, which then can open up the market for holding these assets and being able to offer them to the investors.
Which is interesting, because they're still trying to decide what type of asset it is, right? But they're able to custody it. It's almost like putting the cart before the horse in a way?
Well, it's been an evolution.
Right.
And I think that it will continue to be so, and I think that the SEC, as it's gaining more education around these assets and trying to learn how to protect the investors and to have proper disclosures around what these assets are that are being offered, I think that it will come around. It's a long journey, for sure, but I do think that it requires a lot of thought. It's not an easy asset class to understand, and I think that as the institutions come on board, increasingly, it will help the SEC and other regulatory agencies wrap their arms around this.
Yeah, I also think it's important to note as well, our system doesn't function the same as the EU, as an example, where a framework can just be developed around it. The way our laws are legislated, the way the agencies work with the legislators, it's to your point, it's a lengthy process, and it's not necessarily one size fits all solution. Let's just place a framework around it.
Right.
It is, U.S. law is very complex.
Yes, and the products themselves are very complex.
Right.
So we have the whole world of derivatives that are building up around this asset class, and that's the largest. It is and will be continuing to be the largest asset class growth for digital assets. And in that context, the CFTC has taken the approach of creating these committees and subcommittees focused on digital assets and trying to bring to the table both the regulators and market participants so that they can devise a framework and a policy on how to address this, not just for the US derivatives market, but the broader global market.
What about AlphaPoint's role? Where do you sit within the ecosystem?
Well, AlphaPoint is a fintech company, and it provides the backbone for exchange providers and financial institutions to scale as this market evolves and as the ecosystem is embraced. And so what we do is we face the challenges with that adoption, and we have software that enables, an infrastructure that enables these operators and financial institutions to create efficiencies and scale and also to be able to ensure that they are complying with the regulatory framework.
Which is so interesting because I feel like over the past year or two covering these conferences and a regular course of coverage that you're hearing more about user experience, right?
Yes.
And I think that's a big move that's been made from evangelizing the technology to, okay, it needs to be integrated and it's not, an ethos of just DeFi versus TradFi. It's this market structure that's evolving, I guess, on a more friendly terms, if you will.
Yes.
So I think the fact that you're talking about user experience is a sign of maturity here in a way.
Absolutely. And that user experience now needs to be expanded to capture not just one segment, but a broader segment of the market. So for example, we developed and are powering the Chivo wallet in El Salvador. And so that requires also an educational process with the users, those who have the app, are using it with their iPhones, with their phones, and also having the wallets and being able to trade, invest, and the like. However, to build that out, you also need to build out the merchant framework, the banking framework, and the broader macroeconomic framework in that country and then beyond that for remittances, for example, on a global basis. So that's how the use cases are going to learn, I think, a way to adapt, to broaden, and be more expansive.
I'm glad you brought up that example because in the U.S. and in the West in general, we tend to think very central bank focused, if you will. However, there are billions of people who are developing local economies and transacting business, not just digital assets as a way to store value or trade, but this is how they are effectively conducting commerce and building their local economies. We take that for granted here.
Absolutely, and they've leapfrogged.
Yes.
So a lot of them now no longer look to build the infrastructure that was a traditional, very long path to getting an enterprise infrastructure in place. They've leapfrogged, and now they can just upload an app, download an app, and be able to engage in commerce. Yeah. So I think that is going to also be a key catalyst for developing this market.
Yeah, that's a good point. I appreciate the insight as always, Reba. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from Mainnet. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.